Recent comments from Federal Reserve Chair Jerome Powell have triggered a market reaction. Powell's hawkish tone suggests the Fed isn't in a rush to cut interest rates, citing a strong job market and persistent inflation. As a result, investor hopes for immediate rate cuts have faded, cooling the Wall Street rally. High interest rates have a notable impact on non-banking financial companies, NBFCs. First, they increase the cost of capital, as borrowing becomes more expensive for NBFCs and financial institutions. This results in reduced net interest margins, affecting profitability. Second, there is pressure on profit margins because higher borrowing costs can't always be fully passed on to borrowers, which limits net interest income. Finally, lower loan demand occurs as expensive loans discourage borrowing by both consumers and businesses, leading to slower loan book growth and weaker top-line revenue. High interest rates also increase default risk, as borrowers may struggle to make higher interest payments. This raises non-performing assets, NPAs, and leads to higher provisions, hurting NBFC profits. Furthermore, the high cost of capital discourages investment and business expansion, as firms become hesitant to grow, limiting returns on equity. Lastly, market valuation can suffer. Investor sentiment may turn negative, reducing the valuation of NBFC stocks as concerns over earnings pressure and the challenging high-rate environment mount. Let's compare to NBFC giants, Bajaj Finance and Cholamandalam Investment and Finance. Bajaj Finance has a market cap of 4,08,321 crore rupees, making it a large-cap company. Its high market cap often brings stability and less volatility but also implies a lower potential for exponential growth. Cholamandalam, with a market cap of 1,03,274 crore rupees, is relatively smaller and could offer higher growth potential as it expands. In terms of profitability, Bajaj Finance boasts a return on equity (ROE) of 22.1%, while Cholamandalam has an ROE of 20.2%, highlighting both as efficient, yet differently positioned, players in the sector. Analyzing the valuations of Bajaj Finance and Cholamandalam Investment provides valuable insights. Bajaj Finance's current PE ratio is 26.6, indicating a more moderate valuation than previously. This aligns with its established market position and consistent performance. Cholamandalam's PE stands at 28.1, slightly higher, suggesting investor expectations for growth. While Bajaj Finance's valuation reflects its stability and scale, Cholamandalam's slightly higher multiple could indicate growth potential. Both companies have delivered strong earnings growth over time, but understanding these valuation differences is crucial for making informed investment decisions. Examining the growth performance over the past 5 years, Bajaj Finance has shown impressive compounded sales growth of 27% and a remarkable profit growth of 29%. This reflects the company's strong financial execution and expansion. In comparison, Cholamandalam posted a solid 22% compounded sales growth, slightly lower than Bajaj, but its compounded profit growth stood at 23%. While both companies have delivered robust results, Bajaj Finance edges ahead in profit growth. However, Cholamandalam's significant profit increase over the trailing 12 months, TTM, highlights its improving profitability and the potential to accelerate its financial performance. Let's dive into the latest quarterly results of Bajaj Finance and Cholamandalam Investment. Bajaj Finance reported a robust 28% year-on-year increase in sales, reaching 17,090 crore rupees, with EBITDA growing 24% and net profit up 13% at 4,014 crore rupees. Earnings per share, EPS, rose 10%, reflecting strong performance. In comparison, Cholamandalam delivered even stronger growth, with sales up 35% year-on-year at 6,255 crore rupees and EBITDA also climbing 35%. Net profit surged 25% to 968 crore rupees, and EPS grew by 23%. Cholamandalam's higher growth rates emphasize its accelerating momentum compared to Bajaj Finance's steady performance. Looking at Bajaj Finance's technical chart, we observe a long-term uptrend that has held strong since 2019, marked by a consistent rising trendline. The stock has recently bounced off this trendline around 6,620 rupees, suggesting strong support at this level. However, the price is approaching a key resistance zone near 8,000 rupees, a level tested multiple times but yet to be convincingly broken. Volume analysis indicates stable interest, but a decisive breakout or breakdown will be crucial to determine the next major move. Cholamandalam Investments' technical chart showcases a strong upward channel since 2020. The stock has experienced steady growth, respecting the channel boundaries. Currently, it's trading near 1,231 rupees, having pulled back from recent highs around 1,500 rupees. This level coincides with the lower trendline, acting as crucial support. If this support holds, the stock may resume its upward trajectory. However, a breakdown could signal potential downside risk. Volume analysis indicates active participation, making these levels vital for determining future price movement. Let's analyze Bajaj Finance and Cholamandalam Investment using key financial parameters. Starting with market cap, Bajaj Finance is a large-cap stock at 4,07,733 crore rupees, offering stability but lower growth potential. In contrast, Cholamandalam, a mid-cap at 1,02,887 crore rupees, has room for expansion. Valuation-wise, both trade at similar PE ratios around 26.5, making them moderately valued. Over the past 5 years, Bajaj Finance outperformed in sales and profit growth, recording 27% and 29%, respectively, compared to Cholamandalam's 22% and 23%. However, in the latest quarter, Cholamandalam surged ahead with 35% sales growth and a 25% profit increase. On the technical front, both stocks are near crucial support levels, with Bajaj showing stability and Cholamandalam reflecting strong upward momentum. Please note, this analysis is for educational purposes only and not financial advice. Always do your own research before investing.